Hi, everyone. Welcome to REIMAGINE 2020. I'm one of your hosts, Artur. Today, I have with me Loretta Joseph, a public policy influencer and Fintech thought leader. Welcome, Loretta.
Well, thank you for having me. It's a pleasure to be back.
Welcome back, indeed. So how about we just start off, tell me about yourself, your background, and how did you get into crypto?
So I started my life as a derivatives trader on a trading floor with a piece of paper and a pencil in a 3-year bond pit in 1991. So I'm very old school. I think since then I've traded every asset class there is. I got into crypto after I tried to retire. I was running some global banks in India, and I decided to go back to Australia, and I decided to retire. But then I had a very interesting conversation on my bus that I was getting into the city with the then head of the Australian Securities and Investment Commission, ASIC, the equivalent of the US SEC, who's a very dear friend of mine. And he said, Loretta, you need to look at this thing called blockchain because it's going to change the world. At the time, I thought he was talking about Minecraft because we have daughters the same age. So I spent a weekend on Minecraft being very confused about how Minecraft was going to change the world. But when we met again, I worked out it was blockchain. So I have been in the space then, I said since then, 2014. I was a derivatives trader. I didn't look at blockchain from Bitcoin to start with or cryptocurrencies. I actually looked at how the blockchain could help me as what I did in my past life as a derivatives trader. And one thing that we've always had a lot of pain about when you trade markets, asset classes, was the time to clear and settle. So I built a clearing and settlement system which took T+3 to clear an equity in Australia for a small stock exchange called the Sydney Stock Exchange to T. So that was my introduction to blockchain. And then I decided that I'd better have a look at what Bitcoin was. And I found it very difficult to understand. And I'm going, what is this thing? So I spent the next couple of years of my life spending a lot of time in the ecosystem, speaking to developers. I befriended Robert Kahn, who built the internet. He wrote the TCP protocol and the IP. So I messaged him one day because he was on Google. And I said, hello, Bob, my name is Loretta. I need to understand what you built. I don't think he got too many telephone calls like that. But Bob has been my mentor. So I spent a lot of time now since then learning to code, understanding the protocols, understanding what the internet did and how that was built. I'm not an electrical engineer. As I said, I was a banker. So then I looked at what Bitcoin was, and I was thinking, we're calling these things the wrong terminology. As I said, I was in market infrastructure at a proper stock exchange, and I was looking what a cryptocurrency was, what a crypto exchange was, and I'm thinking, we're all not talking the same language. So then I helped set up something called the Australian Digital Chamber of Commerce, and we set about writing the first ever self-regulation for Bitcoin because I thought this ecosystem doesn't understand what they're doing and nobody else understands it, so there's a lot of confusion. Then I seem to have then became a regulator. So then a lot of regulators and governments started to come to me and say, well, what is this space and what is it? So the first thing I did when I tried to build this clearing and settlement system in Australia on stock exchange, the other stock exchange, the Australian Stock Exchange, had a mandatory, I guess, monopoly, and their software is written in the Corporations Act in Australia. And I thought, well, this is not good. I remember when we morphed from being floor traders to desk traders, we built algorithmic systems because we had nothing else to do, and we put the buy button next to the sell. But the clearing and settlement system of the Australian Stock Exchange inherently came into existence because we didn't have technology. So the Corporations Act got changed in Australia. There is now room for other people to come into that space. So that was my first sort of, road into regulation and policy. So then as the Bitcoin regulations we wrote for self-regulation in Australia was adopted by a number of other countries. And then I looked at actually what we're talking about. So a cryptocurrency, I was very confused because I went into the Australian government and I said, so what is this thing? And I put it on my tax return. So the tax office were calling it a cryptocurrency. Then we had the finance ministry were calling it a digital asset. The Attorney General's office was referring it as a virtual asset. There was crypto assets in there. And I said, well, can't we have one term? Because it would seem like this is very confusing and nobody's referring to the same thing. So Australia, we were the first to do it. We started to refer to digital assets as a new asset class, and cryptocurrency has just been a subset of it. So consequently, moved the years on, I've written a lot of regulation, and I would hope that I've helped harmonise what a digital asset is. As I said, when I started to do this 5 years ago, nobody was talking about a unified term. I think if you pick up any newspaper or any YouTube or any article today, everybody refers to digital assets. So the exciting thing for me, coming from a background, was not only looking at a subcategory of a digital asset, but a cryptocurrency, but imagine now I was looking, we had Bitcoin come along, then Ethereum, and I think Ethereum gave to the world tokenization. I think Bitcoin gave to the world the democratization of money, just like the internet gave us the democratization of information. I think Ethereum gave us the idea of tokenization, and we could actually now take every asset class and tokenize it. So then move along, 2017, the ICO boom came along. I was looking at what an ICO was, an initial coin offering. And I think for me, if the ecosystem had have started back in 2008, not referring to Bitcoin as something, maybe a Zen token, nobody would have cared. But the minute you put coin or or currency into a sentence or an exchange, you upset every regulator that's ever known the old world, and you start confusing terms. So that's what I've done in the last 5 years, is I've tried to create standards and harmonisation across the globe on what we're talking about, so we can all refer to the same, same regulations. I've done it in a number of countries. I wrote the first regulations around ICOs in Bermuda in 2018, and I looked what an ICO was. Had they called that an initial business offering, we wouldn't have been in the kerfuffle that we're in. But I also think from a security regulated perspective, ICOs were very confusing, because security regulators, they regulate securities and equity rights. This ICO boom was sort of more like having, my points on Emirates. So trying to explain this into what the world was, and did utility tokens actually exist? So I take Ethereum as an example. I think it's a yes or no. Bitcoin is obviously a utility, but when you're trying to make money by raising capital and there's an investment, there is a security element. This confused everybody in an ICO because you didn't get any equity right. You just got the ability to be in the network, participate. So I think that was an interesting experiment for me, because I think I worked out that you could probably be a utility and turn into a security, or you could just start your life as a security, tell the security regulators you wanted to be a security, or hey, we're going to have these bizarre hybrids, which I find really interesting. So I might be just a young startup in blockchain. I want to go and raise money. There is nothing wrong starting your life as a security. You just got to be honest about it. And then guess what? You might go and build the Facebook, Google of the blockchain world in the next 5 years. That's awesome. But so once I started to write that, a number of other jurisdictions adopted it. And I think what that did, it got rid of the scammers. I think we looked at what a beneficial ownership was. People told me that my regulation was a bit difficult because it had civil and criminal penalties. But I think, like every technology that we've seen, even since the internet, bad players will always try and exploit the technology. Good players don't, but there needs to be a level where you draw the line and you protect the consumer and investor. So move along then. Then I looked at stable coins. I remember going into the OECD and I thought people with their eyes rolling back in their head, I was going to give people coronaries. I started talking about central bank digital currencies back in 2016. Every central bank governor I saw then was going to, I think, punch me in the head. Roll on now to 2020, and it's what everybody's talking about. So that's how I got into the space and what I do. And so I sit, I guess, as a bridge between the ecosystem, who are not very good, let's be honest, at explaining themselves to regulators and governments, because, I think the Bitcoin maximalists can push people's buttons. But, and then I have regulators and policymakers and heads of state and central bankers on the other side that really don't understand this technology. And I was a trader through the GFC. I will tell you, the one thing that caused the GFC was because people that were sitting in big banks on the boards had no clue what the algorithmic traders were doing. So I think ignorance is very bad. So I try and form a bridge, because I think the internet taught us one thing: walled garden approaches don't work. And this new technology is here. We look at the price of Bitcoin today as being a digital asset, and the new asset classes that we're seeing come out of this space are the exciting thing for me, because I was a trader. I mean, look at DeFi. DeFi's got its problems, but I think, we're going to have opportunities in situations where digital assets morph into opening up liquidity pools in assets that we haven't even thought about yet, because we have that technology. I'll also say, though, to all the traders out there that think they're guns in the crypto world, I started trading in 1991 with a piece of paper and a pencil, hedging 3-year bonds against commodities. Hey, if I had the technology, I would have been a gun trader as well, and I could have done it instantaneously. So those principles haven't changed. What has changed is the ability for us to perform those very efficiently and fast. So don't think that all the derivatives traders and the people that you lump into the pool have been the baby boomers. We're not stupid, let me tell you. And most regulators aren't. But you just do things differently. But we all have to understand that we all have places in this big puzzle, and if we all work together, we are going to forge a really good next decade.
Wow, I mean, that's quite the journey so far. I mean, I have a lot of questions about that. But you mentioned that you worked with a lot of in a lot of different jurisdictions and with a lot of regulators. How do kind of regulators view it today? Is it that where is the sort of where do you see the most interest from regulations? Is it kind of like a push or a pull, that like some small regulators being like opportunistic, or is it large ones that are kind of getting dragged into it due to some scams happening and stuff like that?
So I think that's twofold. The thing that I explain to people all the time is that regulators are not technologists, or policymakers are not technologists, and technologists are not policymakers or regulators. So you have these two very different worlds that have come together. I think we've looked at this year of 2020, and the future of work, it arrived. Everybody was said that none of us could ever work at home in little rooms. Look at it. The entire world is doing Zoom calls and whatnot. So technology is far outpaced, and innovation has far outpaced the regulations that existed. So I think regulators, when I first started to do this, they thought this entire thing was nonsense and scams. I mean, trying to explain to a central bank that he may actually have a digital currency himself one day was just, it was like, I was talking about something out of a Peter Pan movie. But I think regulators are starting to understand it. They're getting smarter. They're starting to get people in to help them with these regulations in a technology that people don't understand. What do we do as a regulator? They always say to this, the regulators too, because I have a 16-year-old. My little girl codes. She understands blockchain. She has plenty of Bitcoin, as a fallout from her mother spending a lot of time in the ecosystem, and she had a lot of crypto kitties. So, when I look at technology, I bounce things off hers, because she grew up with this telephone in her left hand. I grew up learning stuff out of a book, going into a library and doing files. So when we're writing regulations and policies, they're not purpose-built now for what they were 20, 30 years ago. So I always say to regulators, you be mindful of the regulations that you're writing. It affects your children and the children after them. You can't think of everything in the world of technology as the way you learn stuff, because the world is very different. My daughter knows more at 16 than I did at 35. My argument is that what do regulators do inherently? You protect consumers and investors. And over the course of many hundreds of years, regulators have always had an intermediary. So we've regulated the intermediaries, the banks, the stock exchanges, all those intermediaries. So all of a sudden and you look at things like DeFi, the brave new world, where we're removing with blockchain the intermediaries and the middlemen. Are we regulating who? Are we telling people now what they can and can't do with technology? No, we can't. But all we can say, and I think this is one thing that regulators have worried about, and I think it's the ecosystem needs to understand. Regulation is put there to protect people, consumers, investors. We as regulators and policymakers cannot stop people using technology. Look at the internet. They tried to ban that, and look what happened. Open source, you can't, but you need to have enough regulation that protects the consumers, investors, and says buyer beware. All right, you're going to go and do 50 DeFi projects. Guess what? I mean, I was looking at Harvest yesterday, which had a total defunct. That's the reason the regulation exists, because people get into things they don't understand. All we can say as regulators is that buyer beware. No asset class, and I'll tell everybody this because I've traded them all since 1991. No asset class goes one way forever. Everything, has ups and downs. So do that. But if you want to do it, that's fine. You have the ability and the tools. And my other argument to regulators is that we were regulating and protecting consumers, investors in the days when my parents had stocks. They had 4 stocks. They had a stockbroker, and they'd be sent a letter and they'd read it. Yeah, they didn't understand it, but my view is that the millennials and those under have a better understanding of risk than anybody above them ever had. And the GFC has shown us that their risk, they understand risk and probably deal with risk much better than any of the baby boomers. So hopefully that answers your question.
Mm-hmm. Absolutely. And you mentioned that kind of like a wall gardened approach does not work, or that one of the lessons from sort of the past has been that. Do you feel that like policymakers today sort of also share that, have learned that lesson, or when it comes to, for example, like crypto regulations?
So when I first started writing regulations around crypto, I traced back the first ever Bitcoin. The first ever Bitcoin judgment was made in one of the states in the US, and it deemed it as a commodity. So all the regulations I've written around the world, I say 2 things. A, this is not legal tender, because legal tender, money is a different bag. We'll talk about money in a bit, but legal tender is a piece of paper that says this country's money, and that's all that you can use. The central bank issues it, and that's their mandate, and you look after it. So it's not legal tender, but I think cryptocurrencies have the characteristics akin of more commodities like gold and grain. It's not money. It's not legal tender, and it's some of the, what we've seen sort of around ICOs, they came into the securities territory, but I think in general, we're talking about commodity. Because, I mean, Bitcoin itself is a barter system. If I swap my phone for your lovely picture on the back of you there, and we say that's a fair thing, that's fine. If people want to speculate, off you do it. But, I mean, this is a very immature market. People don't understand. I mean, I was trading green bonds in 1995. Immature markets are very volatile. They're very speculative, they're very volatile. But I think regulators are starting to understand now that these digital assets are here to stay. And Bitcoin, what the price of it today, it's becoming mainstream. The volatility swings are moving it out of an immature asset class, and I think it will continue. So I think policymakers and regulators are now starting to understand that they can't ignore it. It's too big to ignore. I like Rahul Paul says it's like the cockroach of the financial system. And it's true. They want it to go away, but they can't. So regulators are now starting to understand that they need to work with the ecosystem and the people that build these blockchains and these systems, because, we're building systems that won't break. So the systems that we're building are now going to be infrastructure. So we've got to be careful what we wish for. I mean, as I said, I have a daughter. I don't want the ability for systems to be built for her kids, things like central bank digital currencies, which are totally controlled by states. Do we want to build these systems which give states total control over everything? So the regulation is good at the moment, and I think it's probably coming too close to an end for what we're seeing. I think I'm going to retire as a regulator after this because I've had enough. But I wrote the regulation about what a digital asset was. In Mauritius, we put out the custody regulations, and I worked very hard on what does custody of a digital asset look like, because it's not like holding money in a bank or a gold in a vault. That was good, and I think we're seeing people in the US are starting to talk about they have custody in banks, so that's becoming into the mainstream. I think security tokens, which is another bit of regulation I've written in Mauritius, are going to be more important and bigger than ICOs, because they have they're asset backed, and they're a very good, genuine way of small and medium businesses raising money.
Mm-hmm. And so you mentioned security tokens. so this was also, it was a massive kind of, buzzword, and everyone expected them to be like, after all of these lessons learned from the ICO boom, then the next thing was going to be like, the not ICO, STO is, this is, let's keep the train going. But then unfortunately, kind of it really, the train sort of like got stuck. Why do you think that happened? And like, what do you think is now different?
So I think what was the ICO phenomena was a twofold effect. So what you had was an ecosystem that couldn't go and raise money from their parents and their friends because they all thought they were mad, to not being able to get money out of banks or not being getting money out of venture capital. So what did Bitcoin and Ethereum do? They went, all right, we'll go and raise our own money and we'll use our own ecosystem to do that. So that was very novel. But when they did that and they started to get retail investors, the thing that I see, and nobody really understands this, because I was a trader, as I said, across many asset classes, and the problem we have with securities, IPOs, stock exchanges, is liquidity. The problem we have in a lot of asset class is not the primary market, but the secondary. So what the ICO boom did was, because there was no regulation around it, people were jumping into the primary market and then getting out of their positions in the secondary market instantaneously. You can't do that in an equity market because there's rules about how long you hold stocks and yada, yada, yada. But that was very interesting to me. I found a very interesting experiment. The liquidity function of what a secondary market in the ICOs did. So security tokens, I think, are going to be very popular, but it's not so much for startups. The security token market, and I've written this in Mauritius, and the licensing of those platforms is for businesses, and they don't necessarily need to be in blockchain, that are small and medium, but already have revenue. They're probably trying in the real world to do between a B and a D raise. It's very difficult. So the security token itself uses the principles of an ICO, but it comes under the guise of security law. So if you're doing a security, what does a security token do? The tokenization and using the blockchain platform just makes that faster. If I was going to raise money in a normal firm, capital raise, it's very onerous. It's very inefficient. It takes a lot of time and a lot of money. So I think that security tokens will make investors, like institutional investors, much more comfortable. And it's a real on-ramp now for some of the companies that are not blockchain but really need to be able to use the technology to grow to the next stage. So I actually still think that the STO market will grow and grow and grow, but it comes under security law, or a security is a security. And I think the problem with the ICO boom was people who were trying to say, oh no, we're not a security, we're a utility, and most of them were not. I mean, honestly, I've looked at so many projects and they were trying to raise money. So the equity rights around it were non-existent. But with a security token, you have equity, and it crunches the process of doing an IPO into a matter of minutes, let alone months and weeks. So I think they will play a very big part in the world of securities going forward.
Got it. And walk me through, like, how would that sort of, let's say I'm a business owner, let's say I'm a real estate developer, and I guess real estate is a good example of a security token, right?
A bond.
And so let's say I want to, so let's say I want to raise, and you mentioned Mauritius quite a lot. So how would that work? So I would essentially be legally kind of structuring my, let's say, like real estate development in Thailand via Mauritius, or how would this sort of, how do these like regulations impact the kind of in one jurisdiction impact the kind of the bigger picture?
So the interesting thing in Mauritius, when we wrote the security tokens, we found this piece of legislation that was written back in 2004, and I think it was a license of platforms, and I think it was written to cover off algorithmic trading platforms, but obviously that didn't sort of take off, and it was sit there. So in most other jurisdictions, it's very hard to regulate a cryptocurrency exchange because you know where to put them, or I call them a digital asset marketplace, not exchanges, because exchanges are public-private partnerships, and governments get upset because the word exchange has a lot of benefits, but it also has a lot of onerous responsibility, like the amount of capitalization use stuff. So I call cryptocurrency exchanges and digital asset marketplaces because all they are matching engines. All you do is you match buyers and sellers. So guys, don't get too excited about it, and you don't do a thing which is very important. Nobody understands what a security or derivatives traditional exchange does. It does what we call no beta trade. So when buyers and sellers come into a security exchange, for the time that they are meeting on the exchange, the process called novation, where the exchange and the clearinghouse take that risk. In what we're talking about, digital asset marketplace, there's no risk involved. It's just a matching engine. So if we can have the platforms that are just matching engines that can match buyers and sellers, with a smart contract, you can write. You don't need an accountant. You can get lower lawyers' costs. You can just go and find an investor and give them equity, and you can do it on a platform. I mean, in the US, there's T0, there's Securitize, there's many of these platforms coming up. So what we decided to do was say, all right, if you're doing a security token, you're just under security law. And under security law, that covers bonds, debentures, as you talked about, real estate funds. So you think about, especially in post-COVID, a lot of businesses are struggling. Like if you look at just Mauritius as an example, we've lost our entire construction industry and tourism industry. So these are new ways of getting capital in and getting them fast. If you can create a structure where you can effectively buy and sell a bond or a debenture or a security in the blink of a bee's eyelid, then that is a really good mechanism to raise in cash. So we regulate the platform, and what you have to do on the platform is show us, we abide by the IOSCO principles of proper market infrastructure. You can't, just all the rules that IOSCO come. And for me, that's exciting because you're right. It's not just about equity and security. Under our Securities Act, we cover off bonds and debentures and real estate. So I think post-COVID in places, if you could come and do it in a jurisdiction that says, all right, this is the legal framework. If you go outside that and you break AML CTF requirements, we'll put you in jail and you'll be under penalties from the regulator. But if you just, if you're happy to still be a security or a bond and do it, but use these platforms which take out, there's no need for clearing and settlement. This is the effective thing what blockchain does, because everything's pre-funded. I think this is going to open up capital opportunities for so many companies and countries, because Mauritius sits between Africa and India. They're the two biggest emerging markets of the world. So that's why I keep talking about Mauritius is awesome, because, we do serve these incredibly large markets. And if you look at the growth of the world, where's it going to be? Africa and India. The penetration of mobile devices and entrepreneurship through technology is at a peak. Not in the US, not Canada, not Europe. It's Africa and India.
Mm-hmm. And I guess, so if we're talking about this sort of, like democratizing access to the capital markets and sort of like, I guess, disintermediating this kind of like the process too for companies to raise capital, is it sort of similar to then to this kind of like the Spackling trend that's been going on in the US right now?
Which trend?
The Spackling trend, SPAC, the special purpose acquisition company?
Yeah, So those things have been around a long time, and that's been the problem with them. These special vehicles that you haven't had liquidity, and that's the problem with old traditional financial markets is liquidity. Why do stock exchanges not work anymore? Because the liquidity is so thin. So people, and they're expensive, and you can't guarantee if you go and do an IPO that you're actually going to be successful. So these special vehicles have been created, been around a long time, but they haven't. They've had like traditional, the processes and procedures of how we execute trades in the old finance world was so onerous and slow and so manual. So I think, with this, the blockchain technology in itself solves the clearing and settlement problems for me, which is where you have all the pain in the life cycle of the trade, not in the trading so much, because trading is almost instantaneous, but clearing and settlement in normal asset classes is so painful. It takes 2 days to clear an equity. It can take 27 days to clear a water entitlement. God knows why. So with blockchains, I found if you can scrunch that process into a matter of minutes, it gives liquidity. You can match buyers and sellers without going on massive road shows, and these special vehicles work. But I don't think they've had the technology to work like they will going forward. So I think there will be a big rush of these things, because people will see them, how do you group together a whole lot of land or real estate? doing their special their special purpose vehicles on markets is it's key for old markets.
Okay, got it. And so another word which you or kind of acronym that you mentioned, which I'd be interested to get your take on, is so AML in crypto. Which is, you know, like I like, can you like help me understand, like where do you think it's going, and like in your opinion, because like to participants in the crypto space and who are like also active in fintech, it seems that what's being enforced is essentially these rules that have not worked in the traditional space are now being forced onto like cryptocurrencies and crypto businesses where they're kind of fundamentally not even possible. And it seems that it's like guaranteed to, you know, heading for a collision course, because neither side is listening to the other and, you know, willing to make any compromises.
Well, I think back in the day, I was probably the first person that ever went into the FATF with my crypto hat on. So I did feel a little bit of like Joan of Arc, because yes, so AML, anti-money laundering, and terrorism financing. I lived in India for 10 years. I ran 2 banks. Now, I've actually produced a movie on this. I was in the Taj Hotel the night that the terrorists came in and bombed the city. So inherently, the FATF was created because we are trying to stop these really important things: people laundering money, which goes on to things like human trafficking, child pornography, and financing terrorists that do stuff. They go in and they blow up, you know, poor innocent people. So under the guise of what AML, it's called anti-money laundering, counter-terrorism financing, the body that does it is the FATF. All of us, none of us want this. None of us. So yeah, and I understand at the time when crypto guys, you know, we're thinking when Bitcoin came in, they wanted privacy, and I know that's a big thing with a lot of cryptocurrencies. But privacy is not secrecy. So yeah, they're 2 words that get very confused all the time. So I've worked a lot with the ecosystem and with the FATF. So inherently, there was a big problem, and I think again goes back to the misunderstanding of what cryptocurrency is. You know, I argue in relation to AML-CTF that the best way to launder money is cash. I can't trace cash at all. It's totally, I could go and live crates that I could walk from the Punjab border in India into Pakistan, buy a couple of guns and walk back in. And you and I can change cash in a group of people. We'll never be able to trace it. Bitcoin, certainly some that are anonymous like Monero and Zcash, but Bitcoin, Ethereum, they're not anonymous. They're what we call pseudo-anonymous. So when push comes to shove, we can actually, because an immutable, traceable, secure database, guess what? We can trace back, all the Bitcoin to the start of to the start of the time. So I think there was a big confusion that all the drug lords and all the the nefarious players of the world were using cryptocurrency. Well, if you are, that's probably why you're a drug dealer, because you're not a rocket scientist. I've done a lot of work with the ecosystem and the exchanges and with law enforcement, to figure out how we can actually use the technology to help us into stopping things like this, and it works. So a few years ago, there was a hit put out on a Japanese politician in Bitcoin. All the securities regulators, all of us, like all the securities people, and the financial intelligence unit, they're the people that look after what you're talking about, got together and we geo-ring-fenced the Bitcoin on the exchanges so they could trace it. So law enforcement were going, oh, this is the best thing we've ever seen. I was like, yeah, really. So there's a lot of, the education bit of that is very difficult. So all of us in the ecosystem, we don't want people to launder money, let me assure you, and we don't want kids put into human trafficking. All of us don't want that. So if we can work together to a point that we just stop these really bad things, because the consequences of money laundering, from criminal activity and terrorism financing are not nice for us as humanity.
And tax evasion, right?
And tax, yes, and tax evasion. I mean, there's probably places you can go to that don't have high tax rates, but I mean, the criminals are always going to do bad things, and technology has always facilitated the criminals doing bad things before the good guys. And I think if you look at the dark net, I tell you, there are a bunch of very organised people we on the good side are not so organised, and we don't collaborate quite as well as those guys. But I think what you're talking about, I think before, was the trouble rule, the able to understand the receiver and the person sending the money. That's for the VAS, the virtual asset service provider. I will make the FATF call it the digital asset service providers quite soon, but one thing at a time. So we've been working very hard as the ecosystem with them, and there are solutions which have actually solved that for them. It's like what the SWIFT network apparently does that between banks, but we've apparently worked that out recently that that's not good, because there was a few banks that were laundering a lot of money and got very large fines. So the solution is there. I think if we can all work together to just make sure that we stop the majority of the bad stuff, because none of us want the stuff that I mentioned. We don't. And most entrepreneurs and people in crypto, they worry about the privacy, but I think at the end of the day, we all need to understand that these rules are put in place for bigger stuff, and we will comply. People mostly don't want to use. People in the ecosystem are not criminals. 99.9% of them are not. Yes, there's some people that use it, so we have to be able to mitigate that risk. And I think that's all it is. It's mitigating the risk and seizing opportunities. But I think we've come together, and I think there's been a much better understanding with the FATF, the ruling. The reporting of over $10,000 as a suspicious transaction for AML CTF. That's probably good. I think if they had got it down to 1,000, that was ridiculous, because you can't have like little startups reporting $1,000, transactions. But I think $10,000 to report a suspicious transaction is good. And I think the FATF are understanding. I mean, the way I see this now is that the blockchain technology is getting so good. Why can't we put regulations in code? And I think this is where we'll go. We'll be able to codify regulations. I mean, and if you look at companies like Chain Analysis, oh my God, like I can tell you, they blow my mind. I mean, you can track all the bad guys doing really silly things. And as I said, that's why they're the bad guys and they're not the rocket scientists, and because they think that it's pretty easy to move their drug money. Well, guys, it's not. You will get caught.
I've read about these articles about chain analysis as well, how essentially they've managed to bring it to a point where to solve a cybercrime that only involves cryptocurrencies is now orders of magnitude faster than something that touches the traditional banking system. That is just because everything is out there in the open and traceable so much faster. Whereas if it touches the a bank account, then you're kind of you're talking weeks, if not months, to sort of to get anywhere.
These open source and these analytical tools that have been developed by the likes of they're blowing the mind of financial intelligence units. So they're the guys that look after financial crimes. In the emerging world, you've got to understand, it's still problematic. These things are really big problems. But if we can show that it's not going to be a useful way to launder money or finance terrorism, then people will stop doing it if it's too hard. Chain analysis, I mean, and that's the thing about open source, the technology itself is so amazing. There was also another case, I think it was last year, when a lot of the law enforcement had been tracking a very large child pornography ring, and it was done with a number of the security agencies. Anyway, through the use of getting together with the exchanges, the digital asset marketplace is what I say, but the crypto exchanges, for what you all know, they were able to ring fence again the Bitcoin, and they made, I think, over 400 arrests in about 2 hours across so many countries, and it was the biggest child pornography thing that ever been busted. And the only reason they did it was because of Bitcoin. So it's these enforcement tools are awesome to stop the really bad things. And I think the whole libertarian idea of Bitcoin is so extreme. Do we really want people? But the whole other side of the centralized world is just worse. So there has to be somewhere in the middle that we can all meet to write these rules of the future that we want.
And so do you kind of I guess you feel kind of bullish on the prospect that the sort of the current the direction of the current policies, that they can actually become sort of effective? Because like the way I see it is that, like, if we're talking about, like, for example, travel rule and enforcing that across the board to, to anyone handling more than $10,000, not even, not only into crypto, this is, it seems like such a kind of counter logical step to, to spot a really small part. You are forcing everyone to do something, very onerous and expensive, and it's sort of that it kind of like threatens to where, from which point does it become like, not really worth it anymore?
Well, then
I guess, like, in your view, do you think that sort of things are actually going in the direction that that it will work out?
Yeah, because I think the two parties will come together. And that's what I've said over the last 3 years. It's 5 years. In 2011, the FATF talked about virtual currencies. And I so wish they had started with a digital asset. The gentleman that ran the FATF, the ex-secretary Rick McDonald, is a very good friend of mine. We discuss this daily. And, it's about following the money. And I was going to say on that, so the travel rule comes out of a lot of things, and it was out of the SWIFT network, from one bank being able to see who the beneficial owner was of the account that they're sending it through. Look, to be honest, with this whole new world, and I think this is what regulators and people at the FATF and big organisations have been grappling with. What happens in the network, it's very hard to control. And, it's like if I want to transact Bitcoin forever and a day, or Ethereum, or Litecoin, whatever, at some point I do need to move it back into the banking system. There is some point. So I think all they're trying to do, and they've got a bit onerous over it, because again, I think it comes down to an education point. If you can control the on-ramps and the off-ramps, you have a better ability to implement the AML CTF requirements that we're doing. And I think there is a much better dialogue between the industry and the FATF. I think they're starting to understand that the technology is not used for just bad; it can be used for good as well. But I think that's all we can do as regulators. Understand that at some point when crypto moves back into the finance system, or the other way, you can monitor things, but in the system itself, I think that will lose a bit of focus, because it's going to be unwarranted for 99% actions that are happening for nefarious reasons. But I think there's a lot better dialogue between the industry and these organisations. So, my idea is that I think we'll be able to put this stuff into code we'll be able to use code as regulation very soon. So I think that will stop a lot of the itching points between the ecosystem and the people that are trying to regulate.
Having a hard time. I think we have a connection issue.
They don't really understand. Now you froze. I'm back.
I think the internet is trying to tell us that it's time to. I think I can hear you now.
Yeah. The internet is telling us enough is enough.
Yes. So I guess my last question to you before we wrap this up would be what would your advice be to sort of to crypto to crypto startups that are sort of trying to to start navigating in this sort of legal and regulatory realm?
So I've been working with the ecosystem, as I said, for a really long time, and I have a rule though. If you're going to come in to meet a regulator or a central bank governor with me, you have to clean your teeth and put socks on. Because I think it's when you're an entrepreneur and you're a startup, you don't even think of the legal and regulatory ramifications that you might get yourself embroiled in, because you just don't. But I think the ecosystem, you do need to have some understanding, and I think that's what I've been saying to regulators. Listen, the 99% of these kids that are building businesses are just trying to build businesses. They don't understand the implications of anti-money laundering, terrorism financing, and neither should they. So we need to create legal frameworks in regulation that are clear, that are not going to be changed on you. And that's what I've been trying to do for my mission for the last years, is to give the ecosystem comfort. If they go into a jurisdiction, there are certain rules and regulations that will apply, and they must abide by. But those rules and regulations are not going to change. And I think my other advice is don't go to jurisdictions that has no regulation, because I think no regulation is super bad, because it inhibits your ability to morph your business back into a mature market. Don't go to a country that's got over-regulation, because that's even worse. There are a number of jurisdictions, and all the regulations I write are in common law, except Serbia. Serbia I did, but Serbia has great legislation now. I think for me, I was trying to find an ability to harmonise jurisdictional regulations and stop the arbitrage. Because when I came in, everybody, all the islands especially, were jumping at opportunities. Jurisdictional arbitrage is not good. So what I do, because I'm Australian, and I'm not a lawyer, by the way, I'm a banker, so I find it quite funny that I could write regulations and laws not being a lawyer. But I think had the lawyers have done it, we wouldn't be here. There is 53 countries in the Commonwealth. I can't make a huge difference in Europe or the US, because their regulations are state to state. They're different regulators. They're big jars of spaghetti you just chuck on the table. But in the places that I work with the regulators, there's one regulator, and those regulations cover 53 countries in the Commonwealth. The British, as colonies of the British, they gave us one thing, and it was very good of them, the same legal system. So my aim has been to be able to replicate the regulations that I've written throughout the Commonwealth countries. And guess what sits in that? A lot of Africa and India. So, if we can have harmonised regulations that aren't going to change, and my dream is that we shouldn't be having treaties of tax. I would love it that we could have treaties of technology. So if one country's got the same regulation as me, then we can passport companies between these jurisdictions with the, under the umbrella that the legal framework's not going to change on you, and you're not going to end up in jail in 6 months for something you didn't think was wrong. So harmonising frameworks and having it multi-jurisdictional without needing arbitrage between those jurisdictions is important. So look for the jurisdictions that have a legal framework already, that tell you what you can and can't do, but they do give you some of those rules and regulations, because, as I said, going to a jurisdiction with no regulation, be careful what you wish for, because you may never be able to come back into the markets where you need to scale your businesses. And what do we need in tech? We need customers. So my advice is you go to jurisdictions that also let you be innovative enough that you can still build your businesses and be creative. But you look at places like Africa and India, because guess what, guys? Everybody has one of the things I'm talking to you on, and these customers, 3 billion people, knock yourself out.
Right. Thank you so much. Definitely. I think this is definitely a very useful piece of advice to most crypto startups. And thank you so much for your time, Loretta. It's definitely been a very insightful conversation. And I do hope that sort of, like you say, it all works out.
Yeah, and just one last thing, I'll say, don't be scared of us. I mean, there's people like me. Nobody should be scared of me. I want the best for the ecosystem. I want everyone to succeed, but I don't want people to scam people, and I don't want people to get hurt. So, let's all work together. There are people like me. We're very old, but we understand what's going on as well. So I think that's the thing. Don't be the startups. Don't be what's the word? Don't be cocky. Don't think you know better than everybody else, because there's a lot of us that have been, that have the experience does mean a lot, and we write regulations not to stop you or jail you, but we write regulations to make sure that the people you're dealing with have some guidance of protection or some level of protection.
Very well put. Thank you so much for your time, Loretta, and have a great day.
Yeah, thanks for having me. Until the next time, maybe we can do a DeFi one next time. Wait till the regulators trying to get, oh my God. And there's a lot of references to food. This is going to be my next great regulation battle, because I don't know how I'm going to explain the food references to most regulators in the world. They're grappling with Bitcoin and Ethereum. I don't know what we're going to do with sushi and oh my God. And
I'd really like to have that conversation sometime. Let's do it.
It's a brave new world. All right, have a good night or have a good day.